on Business Incorporated today. Africa Development Fund to raise money at the capital markets. And International Monetary Fund approves $20.8 million special drawing right for Sierra Leone. Egypt and Oman deepen ties and sign 3 memorandum of understanding. Good afternoon. Welcome to Business Incorporated on Channels Television. I'm John Mekabo. Let's start as usual with market. We see that today it's mostly red at major equities in Africa. Nigeria's index was negative, losing that positive sentiment it's been running with for a couple of days now. Opening the second trading day of the week, it was down 0.3%. Fingers crossed for the closing figure. Hopefully we'll return there. Meanwhile, South Africa's JSE had a decent gain up 0.34%. In Egypt, the EGX30 was down at intraday 1.99%, while Kenya's share index closed down again 0.28% yesterday. We'll remember that Kenya index has been termed the third worst performing in Africa. In the Middle East, it's all positive, though, permeating Tuesday's trading as intraday in the United Arab Emirates. Abu Dhabi, we see, was also positive, and in another region, Saudi Arabia's Tadawul gained over 1%. Our Qatar index was up 1.12%. In Europe now, specifically we end in Germany, where we see how the markets is doing at this time. Stephen Beardsley has the details.
So the major European exchanges, Paris, London, Frankfurt, were all in positive territory to begin on Tuesday, all up around 1%. There's a bit of positive sentiment right now looking towards China, a major market for many European companies, with the expectation that COVID-related restrictions will be brought down in the coming days, and that could increase consumer sentiment in that country. Very important for firms here. So what we're seeing is that shares related to energy, for example, and those related to automaker shares are also up because those are important markets for them. We're also seeing that, for example, luxury product shares, LVMH, that's the parent company of Louis Vuitton, they're also seeing a positive trend today because there's an expectation again that Chinese consumer market may begin to come back for them. That demand, that sentiment there has been depressed for weeks, if not months, based on a lot of the restrictions there. There's going to be also an eye kept on remarks by ECB President Christine Lagarde today towards monetary policy. Investors just want to make sure that there are no more surprises on the way.
All right, Stephen, thank you for that update. Let's head to London now, where Juliana is standing by. Juliana, good afternoon. Well, this afternoon, again, we're talking about post-Brexit agreement, and Northern Ireland Protocol is here now, and it's affecting the UK car industry. Tell us more about this.
Okay, right. So, yes, Brexit woes continue. I believe yesterday the government pushed through that piece of legislation which hopes to kind of override the Northern Ireland Protocol. This is causing plenty of tension, not just in the island of Ireland, but of course in the EU, and it has wider implications for the rest of the world because there are fears that ripping up the protocol would jeopardise relations with the Good Friday Agreement. That's what's been said by US President Joe Biden. But if you look much more forensically, yes, we are hearing a slew of updates, particularly from the car industry and those that work in fishing and manufacturing, that the bureaucracy of Brexit is just not working for them. They are starting to see exports fall rapidly. But I think pro-Brexiteers are saying, well, of course, it's going to be an issue because there are so many world issues that have affected the 2016 vote. One of them, of course, is happening just a stone's throw away from here in Ukraine and the war with Russia. That's having a massive impact on business sentiment when it comes to investing in the UK. And then, of course, COVID. Now, before the pandemic, we weren't seeing exports really dramatically falling between the UK and the continent. But after the pandemic, it just doesn't seem to have that lift. So there are some that would suggest that, of course, this is due to Brexit, but it does depend on who you speak to, because there is data that can confirm any sentiment on what is a pretty contentious issue.
Yeah, and talking about sentiment, what's the sentiment in the markets at this time?
Yeah, the market's doing pretty well, lifted by the oil majors. Oil's been rallying for 3 days successively, and BP and Shell are lifting the UK blue chips at intraday. The all-share is up 1.13%, FTSE 100 up 2 by 1.28%, and the FTSE 250, that's up by 0.38%. In the currencies market, the British pound is currently down on the US dollar by 0.14%, down on the euro by 0.14%, but up on the Japanese yen at intraday by 0.40% in E.
All right, Juliana, thank you so much for the update. Enjoy the rest of your day.
Thank you.
Let's move to other markets now, starting with Asia. Shares in Asia-Pacific region were higher on Tuesday as investors weighed economic concerns. Hong Kong's Hang Seng Index reversed earlier losses to climb 0.7% in its final hour of trade. Other Hang Seng Tech Index gained 0.73%. Technology investor Prosus and will sell some of its stake in Tencent to fund a stock buyback of itself and parent Naspers. The Dutch firm has said that Hang Seng heavyweight and Tencent fell 4.02% in the last hour of trading. Japan's Nikkei 225 rose 0.66% to close at 27,049.47. Other topics gained over 1% to 1,907.38. In South Korea, the Kospi was up 0.84% at 2,422.09, while the Kosdaq declined 0.14% to 769.51. Mainland Chinese markets were higher. The Shanghai Composite was up almost 1% at 3,409.21. And the Shenzhen Component advanced 1.23% to close at over 12,000. In fact, almost 13,000. MCSI Broadex Index of Asia Pacific shares rose 0.29%. Asia's S&P AX 200 was 0.86% higher at 6,763.6 at the end of trading. In the United States, stock futures rose early today following a losing day as the market attempted to keep its rebound from the bear market lows going. Futures on the Dow Jones Industrial Average gained 0.5%. S&P 500 futures edged up 0.5%, and Nasdaq 100 futures advanced just a little bit lower than that at 0.4%. The overnight auction followed modest losses on Wall Street as the comeback rally stalled. The blue chip Dow fell about 60 points, while the broader benchmark, the S&P 500, dipped 0.3%, and the tech-heavy Nasdaq Composite lost 0.7%. The major averages rallied last week, posting their first positive week since May, as major averages rallied off their lows for the year. The S&P 500 is still down 18% on the year, but is up more than 7% from its low that it hit mid this month. Oil prices rallied for a third day today as major producers, Saudi Arabia and the United Arab Emirates, looked unlikely to be able to boost output significantly, while political unrest in Libya and Ecuador added to those supply concerns. U.S. West Texas Intermediate crude futures rose by 1.7% to $111.44 a barrel, extending a 1.8% gain in the previous session. Brent crude futures advanced by $2.22 to $117.31 a barrel, and that's adding to a 1.7% rise in the previous session. The UAE and Saudi Arabia have been seen as the only two countries in the Organization of Petroleum Exporting Countries with spare capacity available to make up for lost Russian supply and weak output from other major nations. In the metals market, gold prices were steady today as traders refused to commit in either direction in the absence of market-moving catalyst. Spot gold held its ground at 1,824.51 per ounce as of the early hours of today. Futures were flat at $1,824.50. A move by Britain and the United States, Japan, and Canada to ban new imports of Russian gold is being seen as largely symbolic within the global bullion market, as Russian exports to the West have already dried up. Spot silver fell 0.4% to $21.06 per ounce, and platinum eased 0.3% to $905.04, while the palladium rose 0.7% to $1,883.69. And back here in Nigeria, with the subsidy bill increasing at a budget of about 4 trillion naira this year, and it's all because of the volatility in global oil prices, industry players in the country are asking for efforts to boost oil earnings. In the 2020 Petroleum Industry Report released by the Nigeria Extractive Industries Transparency Initiative indicates that at least 39.16 million barrels of crude valued at 15.71 billion naira as of then was stolen. Now, dealing with oil theft, according to the vice chairman of Gas to Power Study, Mr. Olabode Showumi, would address Nigeria's issues.
It is about how we manage the value chain. It is about how we manage our security issues. And it is about the fact that a significant part of our crude is stolen internally. And this is something that involves the will, the political will of governance to do it, because stealing of crude is not exactly like stealing tomatoes. So basically, it involves infrastructure, it involves competence, it involves security, it involves a supply chain buyer. So, and all of these does not just happen in a vacuum. So it is connivance within a whole set of people. And technically, it should be a national security issue. In reality, it is an issue that should concern everyone. But having said that, what we just basically need to do is plug the holes. Once you plug the holes, there's greater receipts of cash that will come in. Having greater receipts and having greater benefits for the people is also a totally different thing, because that comes to management and economics. So that's where the CBN, the Ministry of Finance, the Budget Office, and the whole shebang comes in.
And still staying in Nigeria, have you ever thought of what has happened to the number of fishes in those canned food, sardines to be precise? How many pieces are there? And what has happened to the price over time? Well, we'll be having Toyo Iwetan, now analyst with Financial Derivative, joining us after the break to tell us where he's kept those extra fish we used to have in sardine. But that'll be after the break. Do join us again. This is Business Incorporated on Channels Television. You're welcome back, and this is still Business Incorporated on Channels Television, and there we're going to find out what has been happening to the fish that's supposed to be in the can. We have Toyo Iwetan, now analyst in Financial Derivatives, talking about sardine. The price has spiked by over 100% in the last 3 years. We've seen it go from 250 naira per can in 2019 to about 700 naira this year. Well, this is before the war, so we cannot put it on the war. So what is behind this? I don't know fishes in the river anymore, Toyo.
Well, like you mentioned, 2 years ago, sardine was about 250 naira per can, about 3 years ago, and right now it's trading for about 650 to 700, depends on where you're buying from. Now, this is highly dependent on the depreciation of the naira, because it's a product that's being imported. As at 3 years ago, we had naira trading for 360 naira to $1 in the parallel markets. Today, it's trading for about 615 naira. So that's almost 100% increase. So that is a very significant reason why the prices have sprung up in the past couple of years.
Just out of curiosity, are Nigerians searching for alternatives, or are they just abandoning it? Or, I mean, is this just is it a necessity? I think a lot of people can do without it.
Well, I mean, being calling it a necessity is going to be based on perspective, right? So different individuals will have like different options in terms of what they would like to have. Because sardine usually used as a complementary product to have alongside other products. So yes, to some people it's a necessity because they can't do without having these in some certain type of meals. But for other people, they've already gone to have like alternatives in order to meet up with their income and their expenditure.
Is it possible to mitigate a further increase, especially globally now we see inflation spiking?
Well, yes. I mean, the main cause of the increase is because it is highly dependent on imports. So it is dependent on the exchange rates. So if we're looking at mitigating the increase, the first thing we should be trying to do is to see how we can make this locally produced. And if we're going to make this locally produced, a couple of things have to be put in place. For instance, most of the areas dominated by water where you have to fish for the Titus fish itself are mostly contaminated because of the oil exploration activities. So if we could have that activity checked, then we know that okay, the waters are even habitable for these Titus fishes. Also, the government will most likely have to put in policies to support fish farmers in terms of low interest loans and possible create adequate training facilities because it's one thing to have the passion to want to carry out these activities in terms of fishing, and it's another thing to have the technical expertise to do it in the most effective and efficient way.
Yeah, as you have noted, Nigeria imports about 1.2% of global sardine. Another dent to import bill there now. And we see that sardine is one of those 42 commodities on the import restriction list. So how are people still getting around to bringing it into the country, meeting up with this 1.2%?
Well, like you mentioned earlier, and I also said, it's a necessity to some people, right? So being on the restriction list doesn't mean it's outrightly banned. It just means that you will not be able to source for foreign exchange at the official rate to import this product. Sardine is not the only product in that list. You have things like wheelbarrow, toothpick, cement, and the likes. But then these are just efforts by the government to support local production. But then it is really not as effective because we're a highly dependent importing nation. So people would obviously try to find a way to still import these products, thereby going through parallel markets and then imagine importing at the rate of 615, where you could be importing at the rate of about 425, 430 official rates. So it's definitely going to affect the price, and the consumers are the ones paying for it at the moment.
So what stops Nigeria from producing this, at home, even if it means substituting the kind of fish that is there? What, from your findings, has stopped us?
Well, consumers are usually loyal to certain brands and certain tastes. So it's usually not just going to be a walk in the park to bring up an alternative to a product and expect people to just buy into it. However, doing that would be a very, very um, increased significance in terms of putting the pressure on the naira, because by the time we start doing this locally, we're going to have less pressure on the naira sourcing for demand, and it will thereby help in regulating the exchange rates that has continued being sprung up.
Yeah, well, I guess if quality is assured, it might win some Nigerians over. So it's just for an entrepreneur to get out there and do something that at least can get some people, and as you said, reduce some of that pressure that we have on the naira. Thank you so much, Toye Weto, analyst of Financial Derivatives Company, for sharing your thoughts with us. In Sierra Leone, the Executive Board of International Monetary Fund, the IMF, has concluded the 2022 Article 4 consultation and completed the 5th review of the extended credit facility arrangements with Sierra Leone. The board's decision enables the immediate disbursement of SDR 15.55 million shillings. That's about $20.8 million. This brings Sierra Leone's total disbursement under the arrangement to SDR to 93.33 million. And in completing the 5th review, the Executive Board also approved the authority's request for waivers for non-observance of performance criteria pertaining to net credit to government at the end of December 2021, and for the introduction of a multiple currency practice and exchange restriction based on corrective actions taken by the authorities. Sierra Leone's 43-month ECF arrangement was approved on November 30th, 2018 for SDR 124.44 million at the time, or that's about 60% of the country's quota, and extended by 12 months in July. The program aims to reduce inflation, mobilize revenues to allow for necessary spending consistent with debt sustainability, safeguard financial stability, and maintain external resilience to shocks. As part of the official visit paid by the President Abdel Fattah el-Sisi of Arab Republic of Egypt to the Sultanate of Oman, government of the two countries have inked 6 MOUs, 2 agreements, and 3 executive programs at Alam Palace. The two countries signed 3 executive programs on youth and sports, career and training and higher education, scientific research and innovation. The two governments have also agreed to expand mutual recognition of the Marine Certificate for Navigators issued by the Sultanate of Oman and the Arab Republic of Egypt. African Development Fund is expected to list on capital markets to raise more money for its 16th replenishment. African Development Fund is a concessional lending window of the African Development Bank Group for low-income countries and fragile states. It comprises 32 contributing states and benefits 37 countries, including those experiencing higher growth rates headed towards new emerging markets and fragile states needing special support for basic service delivery. The fund's resources are replenished every 3 years in the last 50 years since its establishment in 1972. The fund has provided $45 billion financing to countries. The ADF ranks second among all the 49 bilateral and multilateral institutions surveyed by the Center for Global Development in its Quality of ODA Index. And the role of government to create the enabling environment for business to thrive is the focus back here in Nigeria, as the Vice President, Professor Yemi Osinbajo, made this known at the 5th MSME Awards, which was in Abuja. According to the Vice President, government will continue to encourage local entrepreneurs to contribute their quota to the nation's economic growth.
These MSMEs tell the story of our country's great economic future. We are set to manufacture our own vehicles, as we've seen, clean energy trucks and cars, and we're on course to manufacturing our own weapons, our own armored mobile platforms and aircrafts. We have everything that it takes. But I believe that the MSMEs, especially in technology and manufacturing, especially in the clean energy or green economy, deserve special mention. I'm convinced that this sector will be crucial in global industrial development in the coming years and will leapfrog Nigeria to economic prosperity.
And with the Vice President of Nigeria there talking about MSMEs, we'll say thank you so much for being a part of Business Incorporated today. It's been a good one. Let's do it again tomorrow. I'm Ini John Mekwa.